As controversy mounts in Washington, stocks took a hit today. The Dow is down triple digits. Investors are feeling uncertain about President Trump's recent scandals and the ability to keep his pro-business promises.
Earlier, we talked with Zachary Karabell, president of River Twice Research and head of global strategies at Envestnet, a publicly traded financial services firm, about the stock market's reaction.
Interesting, for the past 12, 17 days of the Trump soap opera, markets have been remarkably sanguine and stable. The healthcare bill fell apart in March. It got passed in April. Markets basically gave a big shrug to all of it, story after story. Today's really the first day that markets have negatively reacted to an anticipation of, hey, maybe the Washington story is going to get a lot worse. That being said, honestly, one day's market movement, no matter how dramatic, is one day's market movement, no matter how dramatic. So, markets may be reacting today because there's a perception, I think, in general, in the media, in Washington, where I am today, that maybe there's an inflection point here toward what we don't know. But, for the moment, all we're dealing with right now is a knee-jerk reaction to who knows what's going on.
Yeah, and that's really important to point out, Zachary. I mean, a lot of times people watch the markets and they say, uh-oh, something's happening right now. What do I need to do? This is one day. People generally should have a much longer term outlook, 3 to 5 years, and all keeping an eye towards retirement. But let me frame the question this way. Given what President Trump has stipulated his policies he would like to see implemented with regards to tax cuts, with regards to health care, with regards to infrastructure projects, how do the next 4 years of someone's portfolio look like with some of the policies that the president is looking to implement?
Look, if there is some meaningful tax reform, whether it's under Trump, another president, whether it had been under Obama, presidents have been trying to figure out some formula for meaningful tax reform for the past decade because the tax code's gotten so complicated and arcane. The last time there was a major update was in the mid-1980s. So look, that would be good for a lot of reasons. And I think you can say that as a Democrat, a Republican, a liberal, a conservative. There's lots of areas here that are fruitful, which also means this is likely to be an issue regardless of administration and Congress. And I don't think anybody should have been investing, and I'm not sure markets really have been trading on any assumption of meaningful tax reform in the next 8 to 12 months. I mean, that's a hope. But there's very little evidence, regardless of what's going on the past couple of days, that that was in the cards this year just because of the complications around health care, challenges of congressional Republicans working with each other, let alone working with the White House and the president. So, again, if you were investing thinking that was going to happen, that was probably a mistake. And I'm not sure markets were even making that mistake in the first place.
Yeah, I know that the market certainly liked President Trump because he's a pro-business guy, and now there is a certain element of uncertainty. But beyond that, I mean, we're hearing from some people the possibility of impeachment. They're sort of raising bringing that word up, and I'm wondering how much does that worry investors?
Someone, I think Jim Cramer, made a good point today. He said, look, if you had sold Amazon in 1998 because of Clinton's impeachment, you would have been making absolutely the wrong investing decision. Politics is politics and markets are markets. There are times when these things converge meaningfully and fundamentally, but there are often times where they are just occupying very different universes. Target, Walmart, Sears, Amazon, Apple, these companies are going to do the business they're going to do or they're going to fail, largely irrespective of whatever drama is going on in the Beltway. I don't anticipate fewer people are going to walk into an Apple store because the news is being dominated by Trump or impeachment or Comey, right? And people are going to buy their iPhone or they're not going to buy their iPhone. Markets will react like, markets are made up of human participants and a lot of machine participants. The human participants are like all of us. If it's a dramatic story, it's going to distract our attention. And if people are anxious, they're more likely to sell than buy. That's just a general truth, or sit on cash. So yeah, the more Washington drama becomes a melodrama, that can be a distracting factor for markets. At a fundamental level, unless these things clearly connect, they don't connect.
And Zachary, let's say now we're talking about investors who are a little bit more sophisticated and someone who just may have a portfolio of mutual funds or a 401k. What kind of plays are you looking at? For example, President Trump has talked about spending a lot more money on defense. So defense stocks, perhaps, or pharmaceuticals. What would be a good play given the specifics that President Trump has laid out?
So, dirty little secret, really smart investors can be just as stupid as really uninformed investors. So the fact that smart investors think they're making smart choices about how these things play out does not actually necessarily mean that they're making such smart choices. Often holding an index fund or a mutual fund because it doesn't get involved in that trying to second guess is oftentimes the smart play. Look, infrastructure stocks for the past 4 or 5 months ran up hugely, and some of them at least, on the anticipation that there'd be $1 trillion infrastructure spending, which was part of the campaign promise. That seems to be a chimera. It seems like that's not going to happen anytime soon. So anybody who bought those, any of the professional money who thought, okay, if there's all this infrastructure spending, I'll buy a cement company or I'll buy a machine company.
We're building a wall too.
Yeah, right. I'll buy whoever's going to build the wall that's not being built. Buying things on the speculation of something that might happen is often a bad idea. Occasionally, if you want to take a flyer, it can work out. So I'm really cautious about ever cautioning anybody, let alone myself, to invest in things that might happen. I think it's a lot better to try to invest in things that are happening.
All right, good advice. Zachary Karabell in Washington, thank you so much.
Thank you.